FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 10/13/20. Well, you know that short-term rentals have been huge. They've been a big driver of the real estate market. If any of you have any experience doing Airbnb or any of the other various platforms out there, we'd like to hear from you what your experiences have been. Please write us at kl@kerrylutz.com. Right now, I got Avery Carl on with me. Avery, real estate professional, and your alma mater is the same as my son's, the University of Texas. Kind of traveled around. What impressed me most about you, besides your real estate background, is that you were the lead guitar player for a punk rock band. That's always been my fantasy career, but alas, I have no musical talent. So I had to stick to just doing podcasting. In any event, I guess the place to find you is the shorttermshop.com. And well, obviously it deals with short-term vacation rentals. Tell us exactly what it is that the short-term shop does.
Sure. We do. Well, let me back up a little bit. So I became a real estate investor at age 26. I had one small down payment that I could utilize for a property. My husband and I wanted to figure out a way that we could make the most money for that one small down payment. We obviously couldn't go buy a multifamily because we didn't have enough. So we thought, well, what about an Airbnb? And we were living in Nashville at the time. We don't anymore. But we thought, we looked into Nashville and the regulations are just too volatile. They're constantly changing. So we thought, well, where can we go where we don't have to worry about that, where it's just a normal thing to rent a privately owned property overnight instead of a hotel. So we went over to the Smoky Mountains, which is about 3.5 hours east of Nashville, and bought one short-term rental cabin there, save you a bunch of long details, scaled that into 5 within about a year and a half. And now I have a portfolio of 32 doors, only 6 of them are short-term rentals. But my strategy in real estate investing is to buy the short-term rentals first, use all that really heavy cash flow to go invest in either more short-term rentals, but in my case, more traditional long-term rentals. And because you can just scale so much more quickly than if you start with long terms. And when I started my journey, there just weren't any real estate agents who could answer my questions in terms of return on investment and occupancy rate and things like that. So I became that agent, and that's what the short-term shop is. We're in 3 states now, probably a few more by middle of next year. And what we do is we help investors identify the highest cash flowing or, best opportunities for investing in a short-term rental. We get you under contract, do the whole regular real estate agent thing, but then we also train you on how to manage these things remotely from wherever you are so that you don't have to pay the standard 20 to 40% of your gross income to a short-term rental property manager so that you can really bootstrap and take all that cash flow and grow your portfolio as quickly as possible on your way to financial freedom.
All right. Well, that's, I've heard a number of people doing it. Obviously, you've been successful at it. And so you got to find the right properties and then you've got to manage them accordingly. How do you find the right property?
Well, you have to start with the right market. So there's 3 types of markets that people can invest in short-term rentals. I focus on one of them. So the one market type is the metro market, which is, your New York's, Nashville, Austin, places like that. Next, we have the big fly-to vacation markets like Aspen, Hawaii, Orlando for Disney. And then you have regional drivable vacation rental markets like the Smoky Mountains in Tennessee or the Panhandle of Florida, the Catskills where you are, Big Bear in California, places like that, places where the majority of the tourists are driving there and not flying. Those tend to be the most recession-resistant markets. And we could take COVID for a perfect example. Right now, short-term rental owners in metro areas and the fly-to markets are really, really suffering because people don't want to get on planes and they don't want to go to big metro areas and be around a lot of people. But what they are doing is taking the 5 to 8 hour drive to vacations to places like I just mentioned. So COVID has actually caused a boom in those drivable vacation rental markets. So there are pros to the other two types of markets, the fly to and the metro. But as of right now, those are the ones that are really suffering. So I personally, for my own investments and my advice to my clients is to stick to the regional drivable markets, because even when the factors are different, like right now it's a pandemic and we're still booming, but 10 years ago, it was more due to financial factors, but it was kind of the same thing. People couldn't afford to necessarily fly to Aspen to go to the mountains for vacation, but they can drive to the Smokies or the Catskills or wherever. So I think it's my opinion that the regional drivable vacation rental markets are the best investments. And then from there, you just choose the property based on what is standard for the market. So in the mountain markets, cabins are what people come to rent. So you want it to be a cabin in most cases. And then the beach markets that I'm in, people come for a condo on the beach or a house that's walkable to the beach, maybe with a private pool. So you just want to make sure that it's what is generally expected from the tourist in that market, and then you'll be in good shape.
All right. So, and then how do you know what to charge nightly or weekly rentals?
That is a very good question. So we developed something that I call the enemy method, which is you just go on Airbnb and VRBO and look at what the neighboring properties that are similar to yours, same number of bedrooms and being managed, self-managed, by their owners rather than a big company, which you'll be able to tell by the manager picture on there if it's a big company or a single person. And look at what they're charging and see what things are going for in your market. Past that, once you get the property under contract and closed and you're ready to list, there are pricing tools out there, like Price Labs is one, Wheelhouse is another one, that will dynamically price your property based on what's standard for the area, what other people are charging per night, also local special events and times of year. So you just hook that up to your listings and you don't really have to bother with manually pricing anymore.
Okay. Interesting. And when you're buying these properties, you're just paying the same price you would pay for any similar type of property, or do they get premiums for the fact that it's particularly well suited for short-term rentals?
It just depends. So they are still technically residential properties and not commercial ones. So they do have to appraise based on comps, just like a residential property, but it does indirectly affect the price in that they will get multiple offers based on how good of a rental it can be, which can drive the price up from there. So it's a little bit of both, actually.
All right. Interesting. And you mentioned that there is like regulations, like in places like Nashville, I know in Miami Beach, they're always dealing with these vacation rentals because, look, let's face it, especially in cities, that's one of the major industries in Manhattan is the hotel industry. So they've taken like real draconian steps against people doing their own Airbnbs for their condos and co-ops and things like that. In the markets you're looking at, do you face any of that regulatory harassment?
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Yeah. So that's why metro area regulations can be a little bit volatile. Places that have a big hotel lobby can really affect the short-term rental regulations. And a lot of times the complaints are raised as disgruntled neighbors, which I'm sure there are an amount of disgruntled neighbors, but for the most part, a lot of the pushback is coming from the hotel industry because the short-term rental hosts are not being taxed according to the same regulations, for lack of a better word, that the hotels are. They're taking away a big market share, things like that. So that places where there are big hotel where there's a big hotel presence is definitely a reason not to invest in an area.
Okay, and so when you're a short-term landlord, if you will, what do you think the biggest negatives are to going after that particular market? Well,
it's definitely not as passive as other types of real estate investing. So, if I get a lot of clients who are like, well, I have $50,000 to invest and I want to quit my job. And that's not realistic. It's something that, it's a little bit of a side job, but there are a lot of tools to automate it. But it is going to interrupt your dinner at some point. There's a limiting belief, I think, with a lot of people that are even considering long-term investing, that they think they're going to get called in the middle of the night all the time. That's not realistic, but it's going to get in the way of your time sometimes. And you just have to weigh that happening against how much money you're making and how quickly you're able to scale the rest of your portfolio and decide whether or not that's worth it to you.
I gotcha. And as far as return, cash on cash investment, what do your investors usually see in the range?
Well, it depends on, so there's a type of loan that is specific to short-term, or not short-term, specific to vacation homes, called the 10% down vacation home loan. And it's a little bit of a loophole because you only have to put 10% down if the property is outside of 65 miles away from your primary. And if you're not going to put a contract on it, like a lease or a property management contract, you can. There's nothing in the Fannie Mae and Freddie Mac guidelines that says you cannot Airbnb or VRBO your property when you're not there yourself. So depending on whether you put down the 10% for that or 20%, it's a little bit different, but it is very easy to hit like a 40% cash on cash return as an average. And I've seen people get significantly higher than that, depending on the circumstances.
So what kind of occupancy rates can you get? Is it too much to hope for like 75 or 80%?
Occupancy rates are going to be dependent on the market. So for example, the Smoky Mountains, you're going to have like an 80 to 85% occupancy rate almost year round. January and February are a little bit slower. Whereas the beach markets, you're going to have 100% occupancy in the summer. Like my beach rental gets Saturday to Saturday bookings all summer, but then that tapers off to about, 60% in the wintertime. So occupancy rate is pretty dependent on the market.
All right. So it's market dependent. Like what about in Florida? What do you see there?
So I'm in the panhandle of Florida. I am not in like way down south. So what we see here, and coronavirus has actually positively affected this too. It's extended our season because people are working remotely and going to school remotely. So they're not confined to the summer months to come to the beach. But we see 100% occupancy in the summer. In the spring break months, we see about 80. And then in the fall, it will taper to 70 and about 60 in the true winter months. But as of right now, the rental that I have is, I would say it's about 80% booked all the way until Thanksgiving.
Okay. And so just going back again, as far as pricing goes, how much you charge per day or whatever, there's a formula for that, or there's a database that helps you figure that out?
Yeah, there are several different platforms that will do that for you. And I'm not exactly sure how they work because I am certainly not an engineer, but they pull in all the data of what other properties in your market are charging per night, and it's constantly changing. And it'll be much different, on Labor Day weekend than it will on a Wednesday at the beginning of November. And it pulls in data on local events that you need to raise your prices for, or, holidays and things like that. So that can all be totally automated to where you don't have to do that legwork at all.
Oh, that's very cool. So it really makes this thing a whole lot easier than would otherwise be the case. trying to figure out pricing and am I too high or am I too low or whatever. Hey, so as far as the best markets, you mentioned they're like drivable from major areas, I guess. But what do you think the best free markets are for short-term rentals at the present time?
I would say the Gatlinburg Pigeon Forge market, the Panama City Beach Destin market, and then another one. I would say Orlando really was in the top 3 until coronavirus, but people don't really want to go back to Disney right this second and be confined. So I would say Killington, Vermont is right up there. Big Bear, California is pretty close too. Oh,
so those are like ski areas there. Interesting. Well, so I guess the big question is, if people are interested, how do they connect with you and pursue this?
My website, theshorttermshop.com. There are several ways to get a hold of me there. Textable phone numbers, email address, social media. It's all right there on the website.
All right. Excellent. Well, we have a link in the show notes to your website, and all you got to do is click it and get through. Any questions or comments for Avery or myself, why don't you send us an email, kl@kerrylutz.com, and tell us what you're doing right now with short-term rentals in the age of COVID. We'd love to hear questions or comments, kl@kerrylutz.com. Check out financialsurvivalnetwork.com. Sign up for our free newsletter. Avery, been a real pleasure. Thanks so much for coming on.
Thank you very much for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.